Pam Bondi is out. Oil is surging past $112 a barrel. Iran is accepting crypto for passage through the Strait of Hormuz. The Pentagon is asking for $200 billion on top of an existing trillion-dollar budget. And the political window for crypto legislation may be closing faster than anyone in this market realizes. Today, I'm going to connect all of these threads, because on the surface, this looks like a geopolitical news dump. But underneath it, there are signals about crypto adoption, flight to safety, institutional positioning, and the legislative timeline that every XRP and crypto holder needs to understand. This is not financial advice. I am sharing publicly available information for educational purposes. Always do your own research. Before we get into it, drop war in the comments if you think the Iran conflict is the biggest risk to crypto right now. Drop legislation if you think the midterm threat to the Clarity Act concerns you more. Drop both if you see them as interconnected. I want to see what this community is actually worried about because both of these risks have real implications for your position. Welcome back. I am the Calm Analyst. Around here, we connect the geopolitical dots to the crypto implications, not to scare you, to prepare you. Today, we're breaking down the war escalation, the oil crisis, the crypto flight to safety happening in real time inside Iran, the insider trading allegations, and most critically, the legislative timeline risk that could determine whether the Clarity Act lives or dies. Let's get into it. Let me start with what Trump actually said last night, because the market reaction tells you everything about how investors interpreted it. The national address was aggressive. Iran's navy is gone. Air Force in ruins. Most leaders dead. The messaging, we're going to hit them extremely hard over the next 2 to 3 weeks. Bring them back to the Stone Ages. If there's no deal, we hit every electric generating plant simultaneously. Oil surged above $112. S&P 500 erased $830 billion at the open. And analysts at Macquarie Group published research saying if this war lasts through June, we could see $200 per barrel oil and $7 per gallon gasoline in the United States. That would blow away the record high from 2022 under Biden. And here's the critical point that most people missed. Even if the military conflict winds down, if the Strait of Hormuz remains closed, the oil impact persists. The strait handles roughly 20% of global oil supply. Disruption there affects world oil markets regardless of who claims victory in the conflict. The stock market's reaction was the clearest signal. When the president promises de-escalation, markets rally. When the president promises escalation, markets sell. Last night was an escalation speech. The market responded accordingly. And crypto, which trades 24/7, absorbed the impact immediately. Bitcoin sliding under $67,000. XRP dropping below 130. Now here's where this gets interesting for crypto specifically, because there's a flight to safety happening in real time that most Western analysts aren't tracking. Chainalysis reported that crypto exchange activity within Iran has surged dramatically. Roughly half of the increased activity is local Iranian citizens escaping the regime's collapsing economy. The other half is tied to IRGC weapons procurement and oil trade. Iranian citizens are using crypto as a lifeline. When your country's military infrastructure is being destroyed, when inflation is spiraling, when the banking system is under extreme sanctions pressure, what do? You move value into assets that can't be seized by a collapsing government. Stablecoins, Bitcoin, whatever you can get your hands on. The data from Nobitex, Iran's largest centralized exchange, shows outflows trending up since 2023 and accelerating dramatically since the war began. U.S. sanctions trigger outflows. Israeli and U.S. strikes trigger more outflows. Every escalation drives more Iranian capital into crypto, and there's a diversification happening within that flow. Tether was the dominant asset through 2024. Since then, Iranian users have been diversifying into Ethereum, Tron, Bitcoin, and other assets. The portfolio is spreading, and the analysts tracking this note that only a handful of tokens have the daily volume and market liquidity to handle the scale of transactions we're talking about. Bitcoin, Ethereum, XRP, BNB, Solana. If you just realize that crypto is being battle tested as a flight to safety asset in a live war zone right now, smash that like button. because this is real-world utility validation that most headlines are ignoring. Now, here's the part that concerns me more than the war itself, because wars end. Legislative windows don't always reopen. The Clarity Act, the single most important piece of legislation for XRP and the entire crypto market. It's sitting in the Senate Banking Committee with a markup targeting the second half of April. Garlinghouse puts passage at 90%. Polymarket sits around 70%. But here's the political reality that I need you to understand. The midterm elections are approaching, and according to Polymarket, there's a 52% chance Democrats take the Senate. The House is widely considered a foregone conclusion for Democrats based on current polling. If crypto loses both the Senate and the House in the midterms, the legislative environment for crypto changes dramatically. A bipartisan approach to the Clarity Act becomes much harder. The pro-crypto momentum that this administration has built could stall for years. That means the window for the Clarity Act is not just about April or May. It's about whether this legislation can pass before the midterm campaign season consumes all political bandwidth. Senator Moreno already warned that if it doesn't pass by May, it may not move again in 2026. Galaxy Digital set the hard deadline. Clear committee by end of April, or likely dead. The war is actually making this worse, because congressional attention is being consumed by the conflict, the defense budget, the tariff discussions, and the political fallout from the escalation. Every day that Washington spends focused on Iran is a day not spent advancing crypto legislation. And there's another layer, the defense budget. The Pentagon is asking for $200 billion on top of an existing $1 trillion allocation to fight Iran. That budget request will dominate congressional discussion for weeks. Budget debates consume floor time that could be going to the Clarity Act markup. The legislative clock is not just ticking, it's being consumed by competing priorities that didn't exist 3 months ago. Comment below. Are you more concerned about the war's impact on crypto prices or the war's impact on the Clarity Act timeline? Type prices if you're focused on the short-term market impact. Type legislation if the legislative delay worries you more, because the legislative risk is the one that most people aren't pricing in. Now let me address the insider trading allegations, because they're relevant to how this market operates and who benefits from the volatility. Anthony Scaramucci publicly described what he called unusual trading activity. $1.5 billion in notional S&P E-mini futures contracts and $192 million in crude oil futures purchased 1 hour before Trump announced a 5-day moratorium on strikes. That was 4 to 6 times normal activity. He estimates between $300 and $400 million in profit from those trades. This pattern has repeated multiple times. Statement from the administration, market moves, trades placed right before the statement, profit taken. Scaramucci's quote was direct. They're laughing at you and they are laughing at me while they're doing it. The kids have said to people, before this is over, we're going to be the richest family in the world. Whether these allegations are proven or not, the perception alone damages market confidence. And damaged confidence in market fairness is one of the factors keeping institutional capital on the sidelines. Institutions don't deploy at scale into markets they believe are being manipulated by political insiders. This is another reason why the Clarity Act matters. Clear regulation, transparent market structure, and defined rules of engagement are what institutions need to feel confident that the market operates fairly. Every week without that clarity is another week where perception of insider manipulation keeps institutional capital parked. Now let me connect the self-custody angle, because in an environment of war, sanctions, insider trading allegations, and exchange vulnerabilities, the case for self-custody has never been stronger. Iranian citizens fleeing their economy through crypto are learning the hard lesson that if your assets sit on a centralized exchange in a country under sanctions, those assets can be frozen, seized, or made inaccessible overnight. The outflows from Novatex that Chainalysis is tracking represent people moving crypto off centralized platforms and into wallets they control. The same principle applies everywhere. If you're holding XRP on a centralized exchange, your assets are subject to that platform's risk. Exchange insolvency, regulatory seizure, Operational failure. The 10 XRP account reserve on the XRP ledger is a one-time cost for true ownership of your assets. Every XRP you hold in self-custody is XRP that no exchange, no government, and no third party can freeze without your private key. In a world of escalating geopolitical risk, that sovereignty over your own assets is not a luxury, it's a necessity. Subscribe right now, hit the bell, drop it in the comments. Because the intersection of geopolitics, oil markets, legislative timelines, and crypto is going to define the next 60 days. We track all of it in real time with the context that tells you what actually matters for your position. Now let me bring this back to the XRP thesis, because every risk I've described today has a specific relationship to the catalyst we've been tracking. Risk 1. The war extends through June. Oil stays above $100. Consumer spending contracts. Risk assets stay under pressure. XRP trades sideways or lower in the near term. But the commodity classification is law regardless of the war. The ETFs are live regardless of oil prices. The DTCC listing doesn't care about the Strait of Hormuz. SWIFT's framework advances regardless of defense budgets. Ripple Treasury's $13 trillion pipeline exists regardless of inflation. Risk 2. The Clarity Act gets delayed by congressional attention on the war and defense spending. This is the real risk. Because the Clarity Act is the catalyst that closes the gap between Ripple winning and XRP winning. Without it, banks settle in RLUSD and fiat. With it, XRP becomes a legally cleared option for on-demand liquidity. But even if the Clarity Act is delayed, the structural foundation remains. The commodity classification provides a regulatory baseline. The ETF infrastructure creates investment access. The institutional partnerships continue building. A delayed Clarity Act means a longer accumulation window at lower prices, not a destroyed thesis. Risk 3. Midterms change the political landscape. Democrats take both chambers. Pro-crypto legislative momentum stalls. But the commodity classification is a binding federal rule that persists across administrations. The ETFs are approved and operating. The institutional infrastructure doesn't get unbuilt because the political composition of Congress changes. The legislative pathway gets harder, not impossible. The honest assessment is this. The near term is harder than it was a month ago. The war, the oil shock, the legislative distraction, the midterm risk, these are real headwinds that weren't on the table 90 days ago. The price may go lower before it goes higher. The timeline may extend, but the fundamental thesis has not changed. The infrastructure has not stopped being built. The institutional signals have not reversed. And the long-term positioning of XRP as a global bridge currency in a tokenized financial system is not affected by who is bombing whom in the Middle East. Wars end. Oil normalizes. Legislative windows reopen. And the infrastructure that was built through the chaos is what captures the capital when stability returns. Let me leave you with this. In every previous crisis, whether it was the 2020 COVID crash, the 2022 bear market, or the SEC lawsuit that froze XRP for 3 years, the people who sold at the bottom of the fear were the ones who regretted it most. Not because the fear wasn't real, it was. But because the infrastructure that was being built underneath the fear was real too. And the infrastructure outlasted the fear. This moment is no different. The fear is real. The oil shock is real. The war is real. The legislative risk is real. And the infrastructure, Ripple Treasury, SWIFT, DTCC, BlackRock, commodity classification, 7 ETFs, 300 banks, $13 trillion in payment volume, that is also real. And it will still be there when the fear passes. Price is a distraction. Value is the reality. Structure is what matters. And the structure being built around XRP right now does not need permission from the Strait of Hormuz to exist. In a market fueled by emotion and noise, we thrive on data and composure. Remember, haste leads to loss, while calm analysis leads to victory. If you made it to the end, you now understand the full geopolitical picture, the oil dynamics, the crypto flight to safety data, the insider trading concerns, the legislative timeline risk, and why none of it changes the structural thesis for XRP holders who understand what they own. Comment "Calm Analyst" below. Let me see who has the conviction to hold through the storm with full awareness of the risks, and share this with someone who's panicking about the war headlines without understanding the difference between short-term macro noise and long-term infrastructure positioning. Like, subscribe, notifications on. I'll see you in the next one. Stay patient, stay rational, and as we always do, we don't wait for the future, we plan for it. Peace.